Hello and welcome everybody to the Gold and Silver Club end of week review presented by myself, Phil Carr, and Nick Kelsey at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets and analysing the week's performance. So this live session will cover an end of week summary for gold, silver, oil and commodity currencies. We'll be looking at the top trades of the week, live market commentary and technical analysis, as well as the week ahead, so key events looking forward, and of course answering any of your questions today. Gold price this week has been fairly quiet in terms of consolidation this week. We'll show you that very shortly on the charts. There's been a lot of activity on the commodity currencies, which we'll talk you through, and some interesting levels to have a look at on gold and silver, and definitely crude oil and WTI oil. So we've got a lot to cover today. The major news this week, well, gold prices traded lower on better than US economic data. Gold prices fell on Thursday after the US retail sales and weekly jobless claims data came better than expected. The number of first-time unemployment benefit seekers fell by 12,000 to 334,000 last week, beating the median forecast of 346,000, and the less volatile four-week moving average was 345,250, so a decrease of 7,250 from the previous week's unrevised average of 352,500. A falling number of jobless claims application signals an improvement in the US labour market. And the receipts at US retailers rose by 0.6% in May, following a 0.1% increase in April. The US Department of Commerce said on Thursday retail sales make up a significant portion of consumer spending, and they're of course the most vital part of the US economy. So the latest report does suggest consumption continued to be a major driver of growth. On Tuesday, rating agency Standard & Poor's upgraded its outlook for the US economy to stable from negative, 2 years after its controversial downgrade caused a political and economic firestorm, and the S&P said it a strengthening US economy and the dollar's status as the world's key reserve currency contributed to a decision to reverse 2011's unprecedented downgrade. So the rating agency assigned the US AA+ long-term and the A-1 short-term ratings. Okay, and better than expected US economic data this week has prompted technical selling in the gold market, which I'll talk you through very shortly, driving the precious metals back below $1,400 an ounce, although we are consolidating at the moment. So looking ahead, the big question is, will gold price continue to consolidate or fall this week? So we'll be looking at the technicals very, very shortly. So before we do that, a little bit about myself and Nick before we continue with some live market analysis. So for those of you who are new to the webinar, I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialise in teaching people how to make money from trading the most lucrative financial markets in the world, so gold, silver, oil and forex. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio, and I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. And joining me on the call, Nick Kelsey, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nick spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks, and through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that give any individual the definitive edge to trade in any economy, and also regularly writes for a number of global business and financial publications, and we've both appeared frequently on financial television. This is us on Swiss Ducoscopy TV recently, and some of our more recent global press publications. Okay, right, so we're going to have a look across at the gold price at the moment. So gold price this morning, $1,378 per ounce and 48 cents. So we'll be looking at the charts very shortly. Before we do so, we'll look at the top trades of the week using the Gold and Silver Club signature trading strategies. So they have, even though the markets have been quite slow for gold and silver, there have been some nice day trade setups. We had a nice position just last Friday, actually, where we were in that consolidation zone for quite a while, between 1375 up to 1395, and we did break down. We sort of break the box of that consolidation on Friday. Quite a nice short, sharp move to the downside, taking a quick 80 pips off that particular trade. So we came out 1367. You can see there, price broke down, came down to profit target. Very simple, 40 points risk to make 80 points, so $400 risk for each lot traded to make $800 for a 2-to-1 risk to reward ratio for a day trade. There's been some really nice trades on the commodity currencies this week. So these are, of course, correlated to the gold and silver price. So we saw on just earlier on this week, on Tuesday, a really nice setup, that Dragonfly Doji setup, actually at a major level of support at the 3-year lows for Australian dollar, US dollar. And after that price broke through the high of that setup, we saw a really nice rally. So we rallied all the way back up to key level of resistance at 0.9635 for a nice 180 pip move. Risk was 61 pips on the trade. Australian dollar, Japanese yen is well. I mean, we trade this because of the correlation with Australian US dollar. So we'd already seen earlier in the week the big move on Australian US dollar, and we were watching this closely to see if that would follow through to this pair, and it did. We had a really nice bounce off previous resistance, new support 89, just below 89.69. We had a nice strong hammer set up, and you can see there where we had, if I bring it down to the tighter time frame, you'll be able to see more clearly how much that market moved just in a day yesterday. But it was, we called it a nice 260 pip move. 69 pips of risk, so each lot traded $690 risk for 216 pips, so $2,160 for each lot, and for a 2.5 to 1 risk to reward. Great. Okay, so what we'll do now, we'll move across to some live technical analysis, and we will have a look at what the charts and the markets are looking like this morning. There's quite a lot still going on today, so we'll bear with me while I quickly switch my screens for you. So first market to look at the moment here is the gold market. So gold moving very tightly range bound at the moment throughout this whole week. You can see these on the daily time frame there. We've been moving between $1,395 to $1,374. We did have a brief breakout which to the downside, which we had a quick day trade on, but it didn't stay that way. You had to be quick in and out on that particular move. We then got a reversal and we came back within this level of consolidation. So really at the moment on gold, very interested to see whether we are going to now get, let me just do a screenshot for you. We can actually have a look at that in a little bit more detail. So whilst the price is remaining fairly tightly within this consolidation here, I'd be interested now to see either a breakout to the upside of this box, back to the $1,413 an ounce level, and if we can get through that level, coming back towards the 1,424, there's a resistance level around that, which we've got here going back to beginning of June there. If we do break to the downside here of 1,374, if we get another breakdown, I'll be looking at 1,365 as the next potential level of support. But if we get below that, I would then look at 1,353 or 1,350 level, because that is where we found previous support going back to May. And a breakdown of that price would see the price possibly come down and even test the low of the year, 1,321. So at the moment, we're kind of coiling up like a bit of a spring on gold at the moment, about to breakout either way. So I would look at those two scenarios at the moment. So keeping a close eye on gold. As I say, this week fairly quiet on the gold market in terms of just consolidating. Silver, very similar situation. We also had, they are of course strongly correlated, gold and silver. So we can see here where silver is just, it broke out of a previous consolidation just at the beginning of the week, which did offer some nice pips, about 60 pips to the downside when we broke out. But then we've just started to consolidate again at this level. So we could see the price, we're still fairly bearish. We may get another move down and then another consolidation zone here, just stepping down, and we see the price just then form a new level of consolidation here. We may come down and even reach the 20. $20 an ounce level, which is the low of 2013, an 18-month low as well. Or I'll be watching the 22 level to see if we are going to get a breakout back towards the highs of May there. So back towards the $23 an ounce level. So if we can break out of 22, I'd look at 23 as the next key level. If we break down from here from 21, I'd expect another leg down and then the price to consolidate and possibly another leg down again. So silver, again, one to watch. Not too much activity on this at the moment, but it's one just to keep in mind, those key prices where the price could break out from at the moment. Now, I like the look of WTI oil, keeping a very close eye on this market at the moment. So WTI oil currently, we're approaching that level of resistance, which we've tested several times in 2013, haven't really broken through significantly so far. So you can see this whole level of resistance around the 97.50 level. So here, this market is moving very nicely between support and resistance. So I'm going to be looking to see some rejection off the 97 level. If we do get rejection off this level, then this is the sort of scenario I'm looking for the price come back to retest the 94 level. So very interested to see if we are going to get rejection, a big move down from this 97 level. So this is one to keep an eye on today. Otherwise, potential breakout here, we could see the price finally break out from this level. I know we had a gapping overnight on Brent crude. So if we go to Brent crude, we had on the 4-hour chart, we did have a bit of a spike up overnight. Actually, we'll come back to Brent because we're also in the same very similar situation to WTI oil. So WTI oil at the moment, I would just keep a close eye on the 97.40 level. I would go just into a tighter time frame just to watch that, see if there's going to be a setup for the price to sell off from that level of resistance there. So definitely WTI one to be watching today. Brent crude oil, yep, similar situation really. We've just come up to that level of resistance at the 105.50 level. So again, we're starting to form a bit of a doji on there with the prices opening and closing at the same level, although we've got a fairly thick body to that. I've been to just a tighter time frame just to see if this is going to turn into a nice inverse sort of hammer candle on here to see if we're going to get some selling pressure now, which we're starting to get a little bit of, but you'd want to wait to see whether we are going to get this provider resistance or whether we are going to finally break out of the 105 level here. Well, would be really a breakout of the 100 and let's have a look, 106 level. Yep, 106 levels to see if we're going to get a breakout or whether we're going to get a reversal. So definitely oils, crude oil and WTI oil, one to be watching. USD Canadian dollar, I would be keeping a close eye on USD Canadian dollar at the moment. So again, let me just, I'll do the screenshot for you so you can have a look at this market. Okay, USD Canadian dollar, we've got several bearish candles. I note here we've got, yesterday we had a bearish engulfing candle. We've got a nice inverse hammer on the daily time frame here. You can see where the price is just really staying within quite a tight box at the moment. So if I just draw that on there. So really what we're looking for, the price has started to break down. You've even had an inverse hammer a little bit earlier on today. There is a Fibonacci level here at 1.01442. So what I'd be definitely looking at is now for this price to come down and break yesterday's low and today's low, in which case I would suspect that we could come down to the next price action level, which is at 1.00394. So USD Canadian dollar, keeping a very close eye on that today. Obviously, if we do find support at this level, we may come back up to test the 1.02544 level, in which case the overall trend is still bearish at the moment, short-term bearish. So I would potentially look for maybe the market to come up, retest that level of previous support there and then become resistance, and that could be another opportunity to sell short and even come back down as far as, again, the 1.033 level. So that's what I'll be looking at, USD Canadian dollar. Again, keeping a close eye on that market. Got quite a few markets to be watching at the moment. You could be watching those with alerts, pending orders, however you trade. This is the move that we had on Australian US dollar, New Zealand US dollar. So earlier on in the week, just going back to Tuesday, this is where we had formed this nice, really strong hammer here on the daily time frame. Australian US dollar, this was actually going back if you go on the monthly time frame, you can see where we've tested some major levels there. We tested a level which has not been seen. Well, we really broke through a level which hasn't been seen since 2010. So this was a 3-year low, and we found support. A lot of buying came into that market. We had clear rejection there off the 0.9328 level, and then that followed through on Wednesday, and it came over the course of the day. That was a nice 100 pip day trade. The price retraced a little bit, offered a pullback opportunity to get in, and then yesterday we rallied again. And now you can see here where we've encountered support, resistance now at the 0.9528 level. So what I've been looking at on Australian US dollar right now is really for the price either to find some resistance here, and we may get a pullback again back towards that previous hammer there, so we may see the price just pull back there, or we could see the price from here, we could see it rally, and the next real level of resistance is going to be around 0.98. You got quite a lot of consolidation previously. That was a level of support and resistance previously in a key Fibonacci level, so that's where I would look at a lot of traders to be taking profit if they were long this for a swing trade. So that would be a key level I'd be looking at next, and then possibly a retracement from that level if we get towards that level of resistance. But I'll be looking at those two scenarios at the moment, and possible sell short setups if we do get to 0.98 level, in line with the overall trend back down again. So that's what we'll be looking at on Australian US dollar. Moving across to New Zealand US dollar. New Zealand US dollar had the same situation. Really nice pin there, so you can see nice strong hammer, long tail to that. Followed through on the Wednesday. It broke the high of that setup, and we came to just under a 200 pip move there. And you can see very clearly where we've come to a level of resistance there. It's also a Fibonacci level, but that's 0.81088 level, and we're finding some resistance there. So potentially now, next levels to look at on New Zealand US dollar. If you're in this trade at the moment, some of you may be long this. The next level would be most likely I'd look at is a 0.8205 level, where the price could come to next. We may just get some consolidation now as the price tries to consolidate some of its gains. It could get a retracement back towards the 0.79127 level, in which case it may get the next move up. We're either going to break out from where we are at the moment. We've had quite a nice move which could take us up to 0.82 level. We're going to consolidate, or we're going to retrace again. So I'll be looking at those three scenarios. But it's been certainly, we've had a nice move so far in that pair, over 200 pips since we had that set up on Tuesday. So that's been quite nice. Australian dollar, Japanese yen. Just briefly talk you through this. Not a market that we trade that frequently, but it is correlated to the Australian dollar, and that's why we like to trade it. So if I show you on this chart, this is a setup that we had yesterday. We came down this resistance level going back to December 2012. Price broke through some key levels at 92.46, 91.10 there. We came all the way down, and with pinpoint accuracy, we based off that previous resistance from December 2012. Take it into the 4-hour time frame. This is where we had the hammer set up yesterday. We had a nice reward on that as well, and you can see where from that level where we bounced off that price with pinpoint accuracy. Really, we had a really nice rally. So we moved just under 300 pips actually. If you managed to catch the whole move there, we caught about 220 odd pips on that move, and you can see we're just consolidating at the moment. We didn't want to hold it overnight. We got out for a day trade on that because there is still a lot of downside momentum here. You can see we're below all the key moving averages, and we may find that this price just comes and retraces now or consolidates at the current price. So that's Australian dollar, Japanese yen. And so we've looked at obviously the commodity currencies, crude oil, WTI oil, gold, silver, Australian US dollar, New Zealand US dollar, USD, Canadian dollar. Okay, so that's the market wrap up for those. There's a lot to be looking at today. So what we'll do next is we go over the key news that you need to be looking out for. So looking at the week ahead, key events looking forward, we have today at 1:30 p.m. we have the CAD manufacturing sales. So manufacturing sales, they measure the change in the overall value of sales made at the manufacturing level. So a higher than expected reading should be taken as bullish for the CAD, while a lower than expected reading should be taken as bearish for the CAD. And this is important because of the CAD inverse correlation to gold price and oil price. We also have 1:30 p.m. today, the US core PPI. That index measures the change in the selling price of goods and services sold by the producers, excluding food and energy. So the PPI measures price change from the perspective of the seller when producers pay more for goods and services, and they're more likely to pass the higher cost to the consumer. So PPI is thought to be a leading indicator of consumer inflation. Higher than expected readings should be taken as bullish for the USD, while a lower than expected reading should be taken as bearish for the USD. On Friday, today at 2:55, we also have the US Michigan Consumer Sentiment. That index rates the relative level of current and future economic conditions. So there are two versions of the data that's released. So the preliminary data tends to have a greater impact, and that reading is compiled from a survey of around 500 consumers. A higher than expected reading should be taken as bullish for the USD, while a lower than expected reading should be taken as bearish for the USD, which has the inverse relationship to gold and silver. Next Monday, 1:30, we have the New York Empire State Manufacturing Index. The Empire State Manufacturing Index relates to the relative level of general business conditions in New York State. So a level above 0.0 indicates improving conditions, and below indicates worsening conditions. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. And of course, that's important because of the US dollar is correlated to gold. On Thursday next week at 10 o'clock GMT, we have the German ZEW economic sentiment. That index gauges the 6-month economic outlook. So a level above 0 indicates optimism and below indicates pessimism. The reading is compiled from a survey of about 350 German institutional investors. Higher than expected reading should be taken as bullish for the euro, while a lower than expected reading should be taken as bearish for the euro. And that's important because the euro is correlated to gold. And Tuesday at 10 o'clock, we have the US core CPI. CPI measures the change in price of goods and services, excluding food and energy. So that is a key way to measure changes in purchasing trends and inflation. Higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. And also next week, we have next Thursday, 3 o'clock, the US existing home sales. So that measures the change in the annualized number of existing residential buildings that were sold during the previous month, and that report helps to gauge the strength of the US housing market and is a key indicator of overall economic strength. Higher than expected reading should be taken as bullish for the US dollar, lower than expected reading should be taken as bearish. Next Thursday at 3:30, we have the Philadelphia Fed Manufacturing Index. Again, this moves the gold and silver market a lot. The Philadelphia Federal Reserve Manufacturing Index rates the relative level of general business conditions in Philadelphia. A level above 0 on the index indicates improving conditions, below indicates worsening conditions. And a higher than expected reading should be taken as bullish for the US dollar, lower than expected reading should be taken as bearish for the US dollar. And again, on next Friday at 1:30 p.m. we have the CAD core retail sales, and that measures the change in the total value of sales, the retail level in Canada. So that excludes automobiles. It's an important indicator because of consumer spending, and it's also considered to be a pace indicator for the Canadian economy. Higher than expected reading should be taken as bullish for the CAD. A lower than expected reading should be taken as bearish for the CAD. Those are all the key news announcements to be looking out for over the next week and today. And of course, to request information on our gold, silver and commodity currencies and our live trading programs, you can go to www.jointhegoldandsilverclub.com or contact us at email at office@thegoldandsilverclub.com, telephone either our London office on 0207 193 0403 or our Asia Pacific office on 852 8191 0403. And once you've gone to jointhegoldandsilverclub.com, what you need to do is just go to Learn to Trade, complete the form just to request additional information, and of course subscribe to our newsletter at thegoldandsilverclub.com to receive free weekly gold, silver, oil and commodity currency news, live market analysis and prices. Okay, fantastic. Well, guys, that's us right 11:30 on the dot. So what we'll do, we'll definitely, if you've got any other questions at all, do get in touch with us on the details provided, and we will certainly wish you a successful week of trading, and we'll see you here at the same time again next Friday. Okay, take care, guys, and we'll see you then. Bye-bye.